Real estate investors across the country are losing big. They're losing money on one out of every seven houses they sell in 2023. I'm Tony, and this is Real Estate Investing and Landlord News. All right, so I have an interesting article for you today, and it's going over a topic that I haven't really covered much on this channel. Obviously, this is a landlord channel, right? But I'm interested in all things real estate investing. So when I talk about house flipping, I usually talk about it, very briefly, because I believe more in long-term real estate investing than house flipping. But I do know a little bit about it as I have flipped a house before, but it's not something that I enjoy doing and that I had great success with, so I did not continue doing it. So house flippers are in trouble, okay? Rising interest rates, everything has caused a huge issue, particularly in certain markets where the values have declined. And this is scary for them, okay? There's going to be a lot of house flippers who end up upside down. That's part of the reason, like I had that fear when I was getting started investing. I had that fear that, something could happen and, the values of the homes decline and I would end up upside down. Well, that is exactly what's happening to the investors in these stories. So before I get into the article, go ahead, hit the like, subscribe button, maybe leave a comment down below. Let me know what you think. First of all, if you're watching this, have you ever flipped a home before or considered flipping a house? If you have, did you make money? How good was it? I imagine that if you were flipping homes back, right after the recession, 2011, 2012, you were making pretty good money. All the way up until the pandemic, you probably were doing just fine. But after the pandemic, with the increase in interest rates, supply chain issues, etc., man, house flipping might not be the best thing for somebody to get started with right now. Now, I'm sure that the pros, etc., who can still find the best deals, they are doing just fine. But I imagine that if you're a beginning real estate investor, you could really be in trouble if you don't know what you're doing. Okay. So anyway, let's get into this story. This article is coming from finance.yahoo.com, and it says U.S. real estate investors are losing money on roughly 1 in 7 homes they sell, among the worst since 2016. And they're most likely to take a huge hit in these 5 cities. Yeah, and as I mentioned before, there's particular cities where values have declined, and they're going to go over them in this article. So let's get into it. The golden days of real estate investors buying and flipping homes for a quick profit appear to have come to a halt. In certain U.S. cities, investors have been forced to sell homes at a loss as sky-high house prices and elevated mortgage rates diminish homebuyer demand. Investors lost money on roughly 1 of every 7 homes they sold in March, according to a recent report by Redfin. In comparison, only 4.8% of overall U.S. homes that sold in March sold at a loss. So yeah, investors are losing money. Okay, they, especially the short term, the people who bought a home just recently and they're trying to flip it because the market is softening. Okay, it's just a simple fact. As interest rates rise, the demand by home buyers to get a home has declined, especially in certain price ranges. Obviously, in lower price ranges, there's still going to be a very hot market because that's where the most buyers are located. But if you're getting into more expensive homes, and particularly in places like California where prices are very high, there are going to be less buyers who are able to pay as much for these houses. That came on the heels of a dire month in February when real estate investors lost money on 14.5% of homes sold, the highest rate since 2016 and a long stretch from the record monthly low of 2.8% in May of 2022. This dispels the myth that buying and selling real estate is an almost guaranteed moneymaker, but the stats are still quite strong in favor of the investors. Where are homes most likely to sell at a loss? Real estate investors are most likely to lose money in markets that saw the largest surges in house prices during the pandemic, says Redfin. The report looked at data from 40 of the most populous U.S. metropolitan areas. Yeah, so if you gained a whole lot of appreciation during the pandemic, well, that's where the losses are going to be at. And, we can think of places, where there were just a ton of people moving. And like places like Austin, Texas, and Phoenix, Arizona, I wonder if they're going to be on this list. I haven't actually read the article yet. So, the one thing that I will say is that up here they said that the this is dispelling the myth that real estate is almost a guaranteed moneymaker. Well, I disagree with that. I think that real estate is a guaranteed moneymaker over time. And that is part of the reason why I'm a landlord and not a house flipper. If you're looking at the short term, yeah, it really isn't guaranteed. Okay. If you're looking at the long term, and I'm talking about at least bare minimum 5 years, but more like 10 plus years of holding a property, then you're almost guaranteed to have appreciation and make money off of it. High mortgage rates have eaten into investor profits and dramatically increased the typical home buyer's monthly payment. This in turn has slowed home buying demand and pushed down sale prices, meaning the share of investor owned homes selling at a loss has gone up. Phoenix, Arizona, the hardest hit market in March, just over 30% of homes sold by investors lost money. Phoenix was followed by Las Vegas, Jacksonville, Florida, Sacramento, and Charlotte, North Carolina. So yeah, I'm actually surprised by this list. So Phoenix doesn't surprise me. I just guessed that, but I guess Las Vegas doesn't really surprise me either. I know that there were a ton of Californians who were moving to both of those cities looking for a lower cost, but Jacksonville does kind of surprise me. What else? Sacramento and Charlotte. So Charlotte does surprise me too. So Jacksonville and Charlotte are the two surprising ones. Sacramento, not really. All the cities that were being fed by the exodus from California, that doesn't really surprise me much because a lot of the people in California right now they were trading up. They were trading up, so they were going from, hey, I'm paying $1 million for this Cracker Jack box in the San Francisco Bay Area to, oh, now I'm moving to Vegas or Phoenix or Sacramento and I'm getting a much, much bigger home for the same price that I would have gotten for, a Cracker Jack box in the Bay Area. But the values in the Bay Area have not, they've actually declined a little bit. So they can't trade up for as much. So I'm assuming that some of them, at least, are deciding to slow down the move, the exodus, until hopefully the home housing market changes or until maybe the economy changes. But there's a lot of issues going on with these cities, and I'm not surprised. They had huge, huge price increases. I got out of Phoenix. I owned a fourplex in Phoenix, and I made a huge, huge profit, more than double what I paid for it within 6 years of purchasing it. I sold it in 2020, and I bought it in 2014, and it was an absolutely wonderful thing when I sold it, right? And I'm so grateful that I got out of it while prices were at the top and everything was going great. It worked out good for me. Fortunately, I didn't hold it, holding out for hoping for more profit, but it is what it is. And I'm not, like I said, I'm not surprised that the prices have declined, especially in Phoenix. I recently showed one of my buyers a 3 bedroom single family home in Glendale that was listed by an investor. Phoenix Redfin agent Van Wellborn said, my client ultimately found another house they liked better, and the investor ended up losing about $20,000. The investor bought the home for $450,000 and sold for $480,000, but put $50,000 of work into it. The house also sold below the $550,000 list price after sitting on the market for almost 4 months. Yeah, the investor, like the market changed so quickly, right, that this investor ended up upside down. And it's hard to tell when exactly it's going to happen, but this is part of the reason why I don't flip houses. Okay. Now the really, like I don't know what the standard is in terms of how much profit you're going to make, and how much your sale price is going to be. But to me, like the margins here, they said they put it on for 550,000. Oh, they bought it. I'm sorry. Let me start at the beginning. They bought it for 450. They put 50,000 into it, right? So they're already all in for 500,000, and then they listed it for 550. So, I mean, I that seems kind of slim to me. because when you talk about the sale of the home, well, you're still going to have to pay, taxes. You're still going to have to pay realtor fees, etc. I mean, your profit margin isn't big enough. To me, it seems like this investor, they were dealing with too slim a margin, and that seems like a very, very, just like a beginner mistake. Okay, like in order to make a decent enough profit off of this, you would have to have purchased it for a lot less. But I mean, that's just me. Keep in mind, I am not a house flipper, but that like to me, that does not seem like that would be worth it in my opinion. Now maybe that's the best you could have done in the Phoenix market before. Oh, I got it at a slight discount, and maybe I'll make 20 or 30 grand in profit off of it. And like, well, to me, that doesn't seem like it's worth all the effort of spending hundreds of thousands of dollars going through. So, yeah, interesting story, interesting article. If you're a house flipper out there, I'd love to see some comments down below, and just let us know, what exactly you are seeing in your market.